The second wave of coronavirus is hitting the world's economy hard with the discovery of a deadlier variant of the pandemic, but also the rollout of vaccines and stimulus packages by governments of respective countries have continued to suppress the pressure and impact of the second outbreak. On the local front, Nigerian stock market ended trading for the previous year on a positive note, reclaiming the title of the best performing market in the world after the all share index appreciated by 4.92% on Tuesday. Now the growth was the highest daily gain recorded by the exchange in 5 years, with a benchmark index soaring 13% in the past month, more than any of the other 93 major global gauges. The global stocks have been soaring high on the backdrop of stimulus packages by the United States, coupled with the massive rollout of COVID-19 vaccines to prevent the spread of the coronavirus pandemic, boosting investors' confidence. I have a stockbroker in the house who will take us through the factors spurring the performance of stocks in the middle of a pandemic. It's Mr. Rotimi Fakaijo. Thank you very much for your time, Mr. Fakaijo.
Good afternoon.
And it's great to have you in the studio as usual.
A pleasure.
What is influencing the performance of now the Nigerian stock market? We've seen some negatives this week, actually, but amid the second wave, and we're still waiting. We don't even have the vaccines in yet in Nigeria. So what is actually playing out with what we are seeing, the pattern of trading?
Basically, if you look at the trend, from the end of the year to the first month in the year, you can see that there is still a continuous flow of good perception of the market and a lot of expectations from investors. And basically, in my own thoughts, I've seen that investors right now are beginning to see a longer term or having a longer term perspective rather than the short term, which had always been prevalent in the Nigerian market for a very long time because of the extent of volatility that we usually have. Now, be that as it may, for this year, I think the trajectory is normal. We closed the month of January with 5.32% positive closing. And though this month, we'll be having a lot of setback in terms of movements, right from Monday till maybe the last time I checked, it was still negative. But I think the extent of the negativity yesterday was much lower than what we have in the previous days. Yeah. It ended about 0.11% negative, compared to what we had on Tuesday. But for me, I believe what is actually pushing the market or driving the market at this time is the expectation of earnings results, which investors are already seeing. And I think for quite some that have come, I think they've really met expectation. Those some may not have recorded the kind of profit that they recorded last year. But looking at the sector where they are coming from as well, I think those results are acceptable to investors and they see better things happening going forward.
The decision of the Monetary Policy Committee to retain all rates, what would you say, any effect on the exchange?
Definitely. Looking at the week prior to the MPC meeting, we saw a situation whereby there was a lull in the market. So investors weren't so sure what positions the Central Bank of Nigeria would take, whether there could be an adjustment in some of the parameters. But as it ended, we saw that all rates, all parameters were retained, the status quo was maintained. And so investors came back in, and that was, for that whole week, we saw a very good performance of the market. So I think maybe for what we see right now, those positions that the CBN have taken, that is retaining status quo, is actually a booster to the Nigerian equity market because rates continue to be low. Even the last bond that the savings bond that was last done, I think the highest rate was between 4 and 5%. Yeah. So that also is incomparable to the dividend yield of stocks when you come to put your money in a stock in the market. So if you are coming to the market, basically as it is right now, you still have an upside for appreciation and also a guarantee for some securities of a good dividend yield as much as 8-10%. So for that, it isn't comparable to what is obtainable in the fixed income market. So investors are preferring what is happening in the equity market right now. And I believe, all things being equal, I don't foresee any unusual volatility within the market, within the system.
That is what some analysts have said. We should be careful, that we should tread with caution. Talking about the positives that are, will follow our market all of this while. Many are saying that it's not yet uhuru, that we should be careful so that it's not like we don't get our fingers burnt. I don't know if you're seeing it that way.
I think, yes, those fears are real. But are they as real as it used to be in the past? I want to extend further on that.
Okay.
Now, what are those things that cause volatility within the system? One, inconsistency in government policies. Two, the short-term play by foreign portfolio investors.
Yeah.
Now, if you look at in the last 9 months, looking at the report that you showed out earlier on, that in the first quarter, there was much inflow.
Yeah.
In the second and third quarter, there was a massive reduction in capital inflow into the country. Now, foreign portfolio investors have maintained a stage back from the market. And if that continues, then definitely we're going to see more stability within the market. Because ordinarily, once any negative news spring up in their own markets, they come here and they dump all that they have and they move on. So those dumping usually enlarges or blow up the volatility within our system. So, but since the lockdown, that we saw a V-shaped movement of prices or of the index, whereby at the onset of lockdown, prices crashed, the index went down considerably. Then when things began to get clear, we saw a situation whereby there was an upward movement again to maintain the level at which it started before we now started recording the positive trend for the year. So if those foreign portfolios investors are not as, their visibility is not as much as used to be in the past, then definitely those fears may have no place to stay. But if you see them trooping back in, one thing or the other, which is unlikely, then definitely we need to nurse that fear again, because they're the major problem at the market.
The market.
I must say, I keep saying it to my colleagues. Many of them didn't agree with me in years past, but they are seeing clearer now that we need to have at most as much as 60 to 70% local participation in our equity market. Foreign participation, let them come, but whatever shock they are bringing, the local investors will definitely be able to sustain the market. So, and I think going forward, that is going to be.
Let's look at policy instruments that you think government and even the regulators could use to help boost investors' confidence at this very time, where we just even got the negative, the figures from the corruption index and all of this. How do you see, what do you think can be done? What policy instrument can be done to help boost investors' confidence in our stock market, even as we even have security challenges on the side too?
Well, I think for me, concerning the markets, there's not much problem. But our problem lies with the governments. There is a lot of security deficit. I mean, confidence deficit between Nigerians and those in government. So as long as that is, a lot of people will rather prefer to keep their money in the banks or in their homes rather than putting it into anything that will yield, that is called investment, that will benefit they themselves and those around them. So that trust deficit from the government is definitely our major problem, because they bring up all the policies and nobody sees transparency in what the Nigerian government is doing. So, and as long as that remains, it's going to affect everything, especially the equity market.
Mr. Fakaijo, let's take this break. We have to go on this short break. Well, of course, Mr. Fakaijo will still be here, and we'll continue this discussion just after this. Stay with Business Nigeria.
It's time for Eyigbeti, the private sector-led Lagos Economic Summit. This year's edition is a virtual event for business leaders, academics, techies, and entrepreneurs to set an implementable agenda for a greater Lagos. From the 16th to 18th of February 2021, participants from all over the world will converge to discuss transformational initiatives that will advance the development of Lagos State at the Eyigbeti Online Summit. At the forefront of this summit is the private sector, leading discussions that will provide government with a roadmap for Lagos till 2050. For more than 20 years, Eyigbeti has contributed significantly to infrastructural and policy development in Lagos State. Join the conversation today. Contribute your quota. Register for the conference at www.eyigbetisummit.com. Let's come together for a greater Lagos. Eyigbeti is hosted by the Lagos Economic Summit Group and powered by Stanbic IBTC Pensions, STB Building Society, United Bank for Africa, Providus Bank, Vetiva Capital Management, Leadway Assurance, Premium Pension, Trust Fund Pension, and Ford Foundation.
News looking at the Nigerian stock market, and of course we're looking at the global space too. Let's see what's playing. Now, Mr. Fakayejo is here to take us through all of this. Now, on the global front, we see that the market valuation seems to be soaring with the real economy when the real economy remains fragile. Now, would you say it's because of the economic stimulus or the supports they are getting from government? Is that why they're a little bit more stable than what we have here?
I think the own system is more structured than what we have here. And they play long term. Nigeria, we always knee-jerk reaction. That is what we see here. But for them out there, they have a long-term plan concerning everything. But the most important thing that is playing out right now is that the hope of a quicker return to normalcy because of the vaccine. So because the vaccine is already being administered to quite a good number, and they believe that they have a timeline with which they can complete everything. So they believe that things definitely will return to normal more than what it used to be. So the kind of effect and impact that we had on the first wave may not really be as much as we are doing now because people are better informed and the system is better prepared to handle the situation. So the news about the administration of vaccine to a lot of people that need to get it is actually one of those things that is driving the market out there. And if you look at the tech stocks out there too, they are doing fantastically well. Wow. And so those also are actually helping the economy. But for us here,
it seems that central banks are also doing something different from what we are doing here. Is that true? Or what do you make of policies of the central banks over there compared to our own in this part of the world?
Well, I think for them, there's a lot of synergy in everything that they do.
Both sides.
Exactly. So if there's synergy, then definitely there'll be better results. But when synergy is lacking, then definitely it will be difficult to move forward. And I keep saying it all the time, that the kind of policies that our own CBN churns out, when you look at it, is not being complemented from the fiscal end of it. So for that, the results are very much limited. But for me, I believe that the stimulus that they have put in place in those places, every now and then they are seeing, they're trying to gauge the effect and the impact. And by the time they see whether it is not achieving as much result, they definitely will move on. But what do we have here? We have hardly seen any form of stimulus getting to everybody. Yeah. The paycheck in the US is to every citizen of US. The businesses that were helped were virtually all the businesses that needed help. But in Nigeria, we only see a handful of people getting 20,000 naira from the government. So the real people that actually need it, they may not get it. So spending is not being enhanced. And once at a time like this, spending is actually much reduced than what it used to be normally, then recovery is always much more difficult. And
recovery is key at this time. Let's look at sectoral performances of our own market now. Back home here in Nigeria, the insurance sector all looked kind of good during the week. They're not looking too well. Yesterday, I think they were down negative. But let's play around the sectors. What are the key sectors at this time as we move on in 2021?
Well, I think for what we've seen so far,
yes.
Because I keep mentioning that the performance of the market last year was skewed towards the ICT and the industrial goods. ICT in terms of MTN and Airtel, industrial goods in terms of Dangote Cement, Boa Cement, and Lafarge Africa.
The big boys.
So those 5 securities were actually responsible for what we saw last year. But when we look at the performance so far in the first month of the year, it cuts across all the sectors. So, and in cutting across all the sectors, we're going to see a much better performance affecting everyone, because if it affects sectors A, B, C, D, and where you put your money is being affected, then definitely everyone is going to smile. Unlike last year, if you didn't buy Boa Cement, if you didn't buy Dangote Cement, if you didn't buy Airtel or MTN, then definitely the 50% positive change in the OSHA index for the year 2020, you will not have any part to, you will not be able to partake of those benefits. But for those who invested in those 5 stocks, they actually smiled to the bank. But for the other stocks, especially banking sector stocks, we didn't see as much improvement as we did see in those other sectors. So I believe virtually all the sectors, banking, industrial goods, the consumer good is not performing as well now. Oil and gas is not doing well. But for the ICT, the banking, the industrial goods, and also the duo of Presco and Okomu Oil, I think those ones are really good to look at.
Some results are supposed to be coming in already. Are they already coming in from the financial institutions? Are they getting in now? How are they looking?
Well, I think I have an issue with that, because if you're supposed to bring in your auditor report within the first 90 days after the end of that financial year, I do not see a reason why you should be compelled to bring unaudited last quarter of the year for people to see, because there's going to be a lot of conflict in those figures. Yeah. Like, for instance, the banking sector stocks, some of them have turned in unaudited results. Their own is two-phase. The results need to be updated, and the results need to be approved by the Central Bank of Nigeria. So why don't we wait for the result to be audited, and also for the result to be approved by the regulatory authority, CBN for the banks, and then for the insurance sector now.
Okay.
As they have their own regulator. Yes. So in that wise, I believe strongly that it will have been much better. We've seen some results. Stanbic is quite good.
All right.
First Bank, at least there's a slight improvement. We've seen Presco, and we've seen Unilever, not impressive at all, but at least there is hope in the horizon. We've seen corn oil, though there is a reduced profitability, but it's still acceptable because of the oil and gas sector which it belongs, that didn't do it well at all in the year 2020. So I think for the result we have seen so far, I think they're quite good, and I believe the rest of them will actually be the ones that will actually drive the market upward.
Mr. Rotimi Ijamos, thank you very much for spending your time with us on the show today. I really appreciate this. Thank you so much. It's really nice having you on the show as usual.